6 AI agents, each built with a unique edge. Miko, AI, Team Leader. Ori AI, Fundamental Analyst. Exi, AI, Technical Analyst. Mesa, AI, Risk Management Specialist. Fenwa, AI Market Sentiment Analyst. And Naledi AI, the cryptocurrency expert. Together, they're engineered to protect, guide, and transform your trading. The future of trading is here. Experience Zentrix AI.
Okay, what's up people? Welcome back to another live stream. Hope everyone is doing well. As always guys, if you are enjoying the streams, enjoying the content, please be sure to drop a like, subscribe to the channel, and hit the bell so you don't miss out on any streams or uploads in the future. If you do have any chart recommendations, any pairs you're looking at, feel free to drop it in the chat and we'll be happy to discuss and go through. Personally, my focus is still with the yen. I do like what I'm seeing on the yen currency currency pairs. Seeing a lot of momentum, trend environments, which is what I'm looking for. Other markets not so fruitful. USD would definitely go through that shortly. Not a big fan of USD markets at the moment, but of course things can change. So of course we'll discuss, what parameters we're looking at to get that change going. But yeah, guys, if you are enjoying the content, drop a like, subscribe, all that good stuff does really help out. What's up, CS? Hope you're doing good. Hope everyone had a good weekend and of course is ready for the upcoming week. But I am still nursing my pound yen position, which I took last week, Monday. So I think it's been exactly a week since I've entered this position. It's picking up very, very slowly. Momentum has been quite stagnant, but we are building higher highs and higher lows on the intraday 4-hour charts. So that is to my advantage. Your price is pointing in my direction. But the key thing is momentum does need to pick up. If this trend is set to continue, I don't want to see it consolidate for long periods of time. I want to see some strength come into play, especially after such an aggressive move we had a couple of weeks back. All I'm looking for is the continuation of that. So it's kind of okay. It's about time we start to see some momentum. But we're looking fairly decent. As long as they don't start breaking through lows, I'm happy. I have trail stops underneath here. So risk is reduced now because if price does start to roll back over, I'd rather just look for re-entries back at the low because the momentum I've anticipated is not there, of course. But yeah, I have managed to trail stops underneath here, so risk is reduced. But again, still looking for the same move, at least back to here. But well and truly, my bigger target, which I'll try and hold the meat of the position to, is back to this swing high, weekly, daily swing high, back around 207.5 roughly. And that will take me around there. So the plan is still very much looking to long the yen pairs. I'm currently long pound yen. I'm not too sure if this is the best yen pair to be looking to scale into. I know I'm trading that market, but it's not like pound's being very, very strong. Potentially there could be other yen pairs that look better to get involved with. For example, Swiss yen definitely has my interest. I'm liking what I'm seeing. Still a fairly strong market. Bit of consolidation at the moment at the highs here. But again, should we break out and see some strength come into play, some intraday pullbacks could look really, really good. On a nice break and retest, and we could see another bullish week because Swiss yen is at all-time highs. So there is a bit of caution there, but it's still such a strong trend until we start to see some meaningful bearish momentum enter the market. Just keep looking to buy. Treat this as gold was a couple of weeks back. Just continuously ripping through highs. We'll of course some point see a bigger counter trend move, but until then, I would say still looking at buy. So again, looking to see what we can do with the consolidation. If we do break lower, that would put me a little bit more on the poor side of things. But if you do break the highs, well, yeah, I see a lot more upside. Am I late? No, the stream just started. The clocks in the UK went back. I tried to keep my streams in line with 10 a.m. UK time, so of course it's quite annoying because the UK clocks do change twice a year. So it's always this little period here where people think, okay, he's not streaming or he's late streaming, or my late as well. So no, the streams are always like 10 a.m. UK time, and the clocks went an hour back on the weekend. So it's still the same time UK, but yeah, elsewhere it looks a bit different. Yes, we'll go through the USD pairs next. No problem. What's up, Yusuf? Welcome to the stream. Hope you're well. Young learner, do you trade dollar yen? Yes, I pretty much trade all USD currency pairs, well, major pairs. Well, I trade major currency pairs, minor currency pairs. I wouldn't trade like USD against ZAR or something like that. So no exotics. But yeah, dollar yen is definitely a pair which I look to. I'm not trading now, but it is a pair which is in my watch list, which I do regularly keep up to date with. I'm doing good, Yusuf. Hope you're all doing well too. Welcome to the stream. Hope everyone had a good weekend. We'll start with the DXY and go through some USD majors. Of course, any chart recommendations, let me know. And if you want me to take a look at dollar yen, I will happily do so. But yeah, DXY dollar. So the plan for the past week or so has been looking to buy the dollar, and we have pretty much seen that bias play out relatively well. It's not like we've seen new highs, so it hasn't been a crazy bullish move, but we talked about a retest of this zone, and price did come into that level. It did retest it pretty well, and we have seen some upside. But always my caution with the dollar was always, how far can this move go? Because we still do have a lot of obstacles above our heads, which you can't be too confident with. You can't necessarily expect price to break through. I'd rather wait for price to break through and then look for the continuation after. I talked about this supply zone here. After all, we're still a very bearish market. If you look at the bigger picture, what the higher time frame's saying, higher time frames do provide nice filters for trades, especially in terms of direction and location. But you can see we are in a bearish market. Yes, it's a bearish market which is slowing down. We're not as aggressive with the highs. We're seeing pretty deep pullbacks. So it could be a market which is getting ready to shift. But there's a difference between getting ready to shift and has shifted. And yeah, it's very important to understand the difference. And again, in terms of has shifted, I'm looking for price to break structure. Then I'll say, okay, we have shifted. We could be seeing a new bullish trend form, but we haven't quite seen that happen yet. Price respected supply, I think a couple of weeks ago. We came back down, tested demand. Nice push up, but again, still respecting supply from the week prior. Really struggling to push through that. So if you didn't catch the weekly analysis on the weekend, I basically just said that the dollar is in a bit of a contradictive area right now. We're seeing higher lows on the 4-hour chart, but it's also like we're seeing lower highs as well. So you've got these higher lows here, but we've also got lower highs. So the market is struggling, and it needs time to decide if it's going to do this or do that. And quite frankly, I have no idea which way the market's going to go. So as a result, I'm being very, very cautious with trading any USD pairs this week until direction becomes a lot clearer to me. I don't really care which way we're moving, to be honest. I just want to find a good opportunity, a good trade. But at the moment, I don't have a good opportunity. So I need direction, I need momentum, and I need clear market structure. Higher highs and higher lows, lower lows and lower highs. Like I said, seeing a bit of contradiction, looking at the highs there. We had a nice bullish move, but it seems to hit a bit of a top here. So yeah, USD just a bit of a headache right now. I mean, we could be shifting here. Potentially prices had a rally, starting to consolidate. It might shift bearish, and there could be some intraday shorts back into this low. So that could be an opportunity. But again, I wouldn't be so what's the word? I wouldn't be so over the moon to go and try and trade that. I think again, I'm trying to trade the noise basically. So USD for me, not really looking fruitful on the dollar, on the DXY. If we go take a look at some other USD majors, start with euro dollar. Basically the same situation with this one as well. Let me expand to the daily chart. Again, you can see mostly we've got this area here, which again is the demands. I wouldn't say we've quite tested it, but the market is still trading above it, which still implies that again, we're not really breaking structure. We're still seeing higher highs and higher lows. So for the most part, euro is still in an uptrend. It might be an uptrend which is starting to run out of steam, but still still so far holding structure. So we got to still pay respect to that. And then again, last week looks like we came back into this area, which gave us a strong move to the upside recently. We've come back to test that. Looks like buyers have entered the market there again, and we're seeing a bit of upside. And intraday, we're actually starting to see some higher highs and higher lows develop. We've got low, high, higher low, kind of higher high there. The market is starting to push high. It's not like a confident move just yet, but it's a market which has definitely shifted from bearish structure here to now seeing bullish. So again, I'm just getting a lot of contradiction between time frames, and I'm not really seeing clear-cut opportunities. The best opportunities to me are always when direction is very clear, especially in sync with the higher time frame, and we're also seeing clear momentum on the lower time frame as well. Then you've got good probability that the market will continue in that direction. Right now, if euro dollar, I don't really know what I'm seeing. Yes, intraday we're quite bullish here, but again, how long is that move going to last as we start to come back into these highs? We've been very consistent with the lower highs here as well. You know, can I bet on price ripping through that? Possibly. I've got the higher time frames to support that bias, but equally so, I wouldn't be too surprised if we do that again. So yeah, just not clear opportunities really with euro dollar or the dollar pairs. If I go take a look at pound USD as well, pound USD has been a little bit better. We've seen some lower highs, but again, if I zoom out, it's pretty much a ranging market. More or less equal highs around here, more or less equal lows down there, and we haven't really progressed for a while actually. Since mid-May, we haven't really seen price trend. It's just been back and forth within this zone. So again, as we had the down move the past few days, we've come back into support in terms of demand. Looks like we're having a bit of a reaction there. So again, do I want to keep selling pound USD? No, I don't think this is a prime place for a sell. Do I want to buy it? Not really either, to be honest. I'm not really seeing an overwhelming bullish confluence here either. It's just a very flat market. So I think the best opportunity is just looking for, you know, fading highs, buying lows, trying to catch mean reversion opportunities. I think trend following in these conditions is just going to be really, really difficult unless you're very, very intraday and you're prepared to be in and out. But yeah, pound USD to me, again, not really providing much of an opportunity. Looks like, again, we're forming a higher low here. Let's see if price is going to push up and break structure. If we do that, then we're very much in a noisy market, to be honest. Yeah, I would very much leave pound dollar alone. So yeah, pound USD not looking fruitful either. I would definitely be very careful trading that one. If we take a look at dollar CAD, I was trying to buy this one last week. Almost played out, but not quite enough energy to test the highs. Since then, we've been trading lower, putting lower highs in, and altogether looking quite corrective as well. Now, dollar CAD, I'm still pretty much bullish on the higher time frames. I like this momentum, and I'm still looking to see if I can bet on the continuation of it. But of course, I do want price to come back and retest it, maybe start to consolidate and start to pick up some momentum back up again. And that's the moment which I'll start looking for buys and some entries. Right now, it looks like we're kind of in our pullback stage. We're looking pretty bearish, I would say, intraday. This looks like another lower high to me, and we've just about taken out that low. So, if anything, shorts for dollar CAD could actually make some sense here, because we are starting to create some bearish structure. It is quite choppy and quite corrective, but if we can start to see some more momentum, there could be some healthy pullback opportunities for a short. Dollar CAD intraday, I like the downside there. But higher time frames, I'm still looking to see if I can buy some dips around 1.39 potentially. So dollar CAD, I can get behind the price action a bit more, especially with the intraday shorts, because the way I see it, we've got consolidation, breakout, and now it looks like price has hit some type of top, and we could be seeing a pullback. So you're just looking to take advantage of a counter trend. Really, there's some sense to that. Pound and euro, I'm not really sure what's going on there. In terms of Aussie dollar's price action, bit of a gap, and now price is looking pretty bullish. I have spoken a lot about this area here as an opportunity for price to potentially react and see some downside. It's a strong supply zone, gave us a big drop. Again, Aussie dollar's conditions aren't fantastic either. I would still say that prices could either say a bit of a consolidation or just a very, very kind of relaxed ascending channel here. Either which way, a really corrective market. But I still like this zone here. It lines up pretty well with resistance here. So I could see price pushing into that zone, reacting. It might not give us a huge sell-off, but I can see an opportunity of at least a reaction there. So that does interest me there for Aussie dollar. We're not too far away from that zone, so I will keep an eye out. Looks like we have broken out of this consolidation here. So if anything, there might be some intraday pullbacks to ride it up to the high. But yeah, I would be careful because, again, we're trading in the middle of the noise here. Not necessarily the best location to trade, but if that momentum does sustain, has a healthy pullback, there's a good chance of a continuation. But yeah, I'll just wait to see what we can do at that zone. Again, a big part of trading for me is where you're trading, and also the conditions of the market as well. Conditions, Aussie, not great, but that is definitely an interesting supply zone to me. New Zealand dollar, actually not bad structure as a whole. It's again a fairly choppy, corrective, bearish market here, but we've been really consistent with the low lows and lower highs. So as long as we maintain structure, I would have that bearish bias, and I quite like the opportunity to see if I can short it. But again, I'm looking for a deeper pullback, at least back into this zone around 0.582. So again, looking for a lot more upside to get to that zone. Then I'll look for some shorts. For the most part, this looks really, really corrective. So not really seeing any crazy bullish momentum, which would indicate a reversal just yet. So as long as we don't take out that high, I'll look to see what we can do in that area. But for me, the shorts are still too early. I need a slight deeper pullback before I will be interested. In terms of gold and silver, it's not looking particularly great for them. Gold down on the day, but altogether I would still say just trapped inside this miniature consolidation. I said buys could be good for gold and silver next week, but I want to see some strength come into the market. I want to see an aggressive break to the upside to show me that, okay, momentum stepped in. Because if you look at because I was talking about this on the weekly analysis, I said if you look at the 9 EMA, which is a super aggressive EMA, but it does kind of show how aggressive the trend has been on the daily chart for gold. This is the first time price is trading back below the EMA since the breakout back in late August. So it's a clear change in the strength of trend. It's not necessarily to say that, okay, we're bearish because we're below the 9 EMA, but it does provide some context to show that, okay, we're definitely weakening. And I wouldn't be surprised if gold goes for a pullback. It's very, very overstretched. A pullback would actually make some sense, to be honest. So if gold does have a meaningful break here, now I'm getting successive bearish structure. Equal highs over here, the break of that low. Now we're getting some more lower highs, another strong break of that low. Yeah, I would actually be pretty bearish in gold, looking for more downside, to be honest. Yes, the bigger moves still may be bullish, but at least intraday or even intra-week, I think shorts is the better option until we do see some strength come back into the market. So I'm leaning a bit bearish. But let's see where momentum comes. We are still 50-50 in this range. So until we kind of get that momentum back into the market, I'll leave it alone. But yeah, strong break to the downside, I'll be pretty bearish. And lastly, silver. Silver, I'm backing away, to be honest, as well. Again, another market trapped in this range. Let's see which way we break out. Again, a convincing break to the downside will make me pretty bearish on the market. Equally so, a strong break to the upside. I wouldn't mind some pullback opportunities, but I wouldn't be so confident to trade it all the way back to the high here. Again, after such a meaningful pullback, I wouldn't just straight away bet on a push back to highs. Yeah, another bullish leg. Intraday, intra-week, sure. Back to this zone. That could be interesting, but yeah, back to the high might be a bit too much of a stretch straight away. So yeah, gold and silver, just really indecisive right now. I can see strength coming in. I can see weakness still there, to be honest. It depends which way you break out the range, and then I'll look to continue that momentum, really. And then USD, yeah, USD looks horrendous, so I'm not really focused on USD pairs this week. Anywho, let's say hello to some guests. What's up, LFTJ? Yes, dollar index we had a look at. Yeah, I'm not a big fan of a lot of contradictory price action there. Is it bullish? Is it bearish? Of course, you can scale to the lower time frames and map out some short-term opportunities of strength or of weakness even. But in terms of the context of the week, it's really up in the air to me. Hoodie one, okay, nice. UJ about an hour ago. Okay, cool. Little profits. I caught CAD buy as well. Yeah, yen pairs I think is where it's at. To get to the high in just over an hour. Brilliant trade. Nice. Congratulations, Holy One. Yeah, I think the yen pairs is where it's at. I'm personally looking to see if I can trade or add more to the yen pairs because I'm ready in pound yen, but I'm looking to see if I can maybe pick up Swiss yen as well, or maybe even euro yen. To be honest, because at least I've got direction, I've got a higher time frame back in that trend as well. So yeah, I think yen pairs is where it's at. USD's really tricky. Yusuf, yes, we could take a look on the 15 intraday as well. The thing is, intraday you might find a little bit more of an opportunity, to be honest. The full hour and the daily really choppy, but scaling to the 15 you might find something there. So we'll dive into that. Okay, still looking for long CS. Fair play. I mean, I kind of do expect DXY still to break higher, but it's just not a trade which I'm willing to bet on right now. Because again, I'm not quite convinced that the DXY in the high time frames is still like in a healthy bearish environment. It's just likely to rip through lows and continue bearish. It could do that, but I'm not quite convinced. It does look like a market which is starting to bottom. So eventually I do think this will happen, but yeah, it's just not in the best place for me to be buying just yet. So I'm being patient. I'd rather kind of wait for the move than look for pullbacks. Of course, it does mean I enter later, but that's kind of the situation I want to be in. Okay, Euro pound, get ready for a buy as well. Okay, interesting. We'll take a look at that. Follow the trend. What's up, my man? I hope you are doing good. Gold continuation sells to 4K. Oh yeah, I remember you said you were in some shorts for gold, weren't you? We'll have a look at that idea. I mean, if it does break support, it could very much end up at that zone, to be honest. But we'll take a deeper dive into that. What's up, Bashi? Welcome to the stream, my man. I hope you're doing good. Appreciate the message. Yeah, guys, if you're enjoying the content, drop a like, subscribe. All of that does really help out. And, of course, any questions or chart recommendations, drop it in the chat. And we'll discuss. Something weird happened today. I was wrong on my analysis. Been a long time since that happened. Well, that's a learning curve there. You drop that down, what happened, and you can learn from that. But yeah, I mean, of course, it's going to happen. It's all probabilities at the end of the day. If yeah, the funny thing is, even if you're like extremely accurate with your analysis, of course, every once in a while you'll be wrong. And the other side of the coin, even if you're very poor for your analysis, every once in a while you'll be right as well. That's just how probability works. But again, the funny thing is, you don't need to be right every time to make progress in this game. It's all about probability and risk reward. What's up, Lighter? Welcome to the stream. Hope you're doing good. Welcome. Yes, dollar yen USD are okay. A bunch of pairs to get through. We'll take a look. Done with the gold trade, closed. Okay, fair enough. Today now wait to see how the market plays out. Okay, fair enough. Yeah, we'll discuss that. First, I'll take a look at dollar yen quickly, and then I'll go through euro pound. Well, euro USD, pound USD, then euro pound together, and take a look at gold. And USD on pound CAD for Lighten as well. Anyway, let's get to it. So we'll start with dollar yen. So it's another yen pair. Is it the best yen pair to trade? I don't know. It will depend on what USD does, but to be honest, I do expect the yen to be weaker anyway. So I do think dollar yen is still likely to trend higher. It might just not trend as aggressively as some other crosses will do. But to me, it's still a market's pointing up. Is it the best time to buy? Probably not. You can see we're running into some resistance now. I'll be a little bit cautious there, looking to buy into that. If price was to break through, that's a different story. But we are trading to a high there, which you want to be careful of, because that's where a lot of people will be interested in. Price might reject it, wick through, and then start to have a deeper pullback. Or we legit could see a nice breakout, and that could be a nice area for a break and retest opportunity. Now, I am very bullish on dollar yen, so I would be looking at breakout opportunities and retests. I mean, this is not my favorite yen pair to trade. We can take a look at that shortly, but if I was looking to trade dollar yen, it would be wait and see if price can break for the highs and then look for a retest at some stage. So I quite like what I'm seeing in terms of momentum. If you flick to the daily chart, momentum still looks pretty good there in general. It's just the fact that we're trading at some resistance now, which makes things a little bit awkward. And if I drop even lower, I mean, we are starting to slow down a little bit too, which is not the best sign. But yeah, it's still a very bullish market. I'll be waiting for a break of the high and see if we can bet on the continuation. So I'll keep an eye on that. In terms of Euro USD on the 15, I think with this one, yeah, I mean, the thing is, when I drop to the 15, I want to be utilizing a direction from the higher time frames. So the 15 will complement that direction, which gives extra confidence to the trade. Because I don't really have direction in the higher time frames, I'm relying on the intraday charts to provide direction and opportunity, which isn't always the best case in terms of like high quality opportunities, because you want synchronicity between the time frames. If everything's pointing up, there's a good chance the market's going to go up, right? So yeah, a 50-minute chart pointing up might only last like a few candles before it does reverse. So on the 50-minute chart, there is some higher highs and higher lows here. We're starting to push back into resistance here. Again, if a sharp break of that could provide some opportunities in a break and retest for continuation. But equally so, I wouldn't be trying to hold this trade, back to swing highs on like the 4-hour chart. I wouldn't be looking to do that at all. So I'll be very cautious here with try and trade euro dollar on the 15, just because I don't really have a good directional read of what I'm expecting the market to do, which will help in terms of holding trades for bigger targets and spotting good opportunities. So yeah, Euro USD to me still looks pretty bullish, but I would wait on the break of the high. So if you can get a break of the high, that'd be great, and then we can bet on the retest of that. And I imagine pound USD is in a similar situation. Again, this one's trading in a bit of a demand zone, so you can see how price is respecting that area. And perhaps we might see maybe not as big of a push as that, but we might see a bit of a pop to the upside, maybe the first half of the week. So there could be some opportunity to take advantage of that, because again, with a market which is extremely indecisive, you don't want to be holding a trade for too long, because just in terms of probability, the longer you're in that indecisive market, the more things that could potentially go wrong. If a market's extremely indecisive, if you're in and out in the right areas, you can still take advantage of that. But as time goes on, more uncertainty comes into the market, or into what you're expecting the market to do. So because of the zone we're trading, yes, we might see a bit of a bounce of that. If I drop to the 15, yeah, I mean, I will wait for us to break structure. This high needs to go, and then perhaps we can look for opportunities on a pullback. But I do like we're starting to flatten out there. It does look like the market is starting to form a bit of a bottom and could be getting ready for a bit of a rise. So I would suggest keep an eye on this high here. If that can go, you can probably bet on some pullbacks and some continuations. I wouldn't be looking to short. No, this is a way too corrected market now, and it's got too many red flags, and especially because of where we're trading to. So the only thing that makes sense would be some longs, but the market structure isn't quite ready for that yet. So looking for the break, and then we can bet on some pullbacks hopefully. So yeah, hopefully that makes sense there for pound and euro. It's difficult, to be honest, to look for good opportunities, but that's the best I can see really, which actually makes sense as well. Otherwise, I'll leave it alone. We'll take a look at, was it gold next? No, we'll look at euro pound, and then we'll take a look at gold afterwards. And we'll go through USD ZAR and pound CAD as well. What's up, Tony Gold? Welcome to the stream. Hope you're doing good. What is up, my man? Hope you're well. 98.8. Still holding for now. Okay. Yeah, I mean, yeah, I'm just not a big fan of the DXY. I kind of do expect us to eventually break higher, but that's more like an instinct rather than something I can base a trade around at the moment. Things can change midweek, and I could potentially be looking at longs in the dollar potentially, but a lot needs to happen before I do start looking to buy it back up again. In terms of Euro Pound, Bash, you said you're leaning to some longs. I can see the logic there. We've got the prior swing high around 0.875, and you're just looking to bet and price, I would imagine, hitting that level. And I think that makes sense for the most part. We're starting to pick up momentum, equal lows there. Now we're seeing some higher lows. You're betting on another higher low there forming. Looks to me that we're coming back to retest some structure as well. So in terms of location, it makes sense too. If it drops like an hourly chart. I do like how corrective we are as well on the pullback. So yeah, I would say if we can get some momentum, it's not a bad buy. It's not a bad buy. In terms of probability of us getting to that high, looks pretty high to me. Seeing a lot of momentum to the upside now. Big bullish candle, big bullish candles, big bullish candles. So it's a clear sign to show that, okay, the buyers are very much in control. Not really seeing much bearish momentum. If we can get some strength back in, yeah, probability push back to high makes a lot of sense. So yeah, I do like Euro Pound. It is a choppy market altogether, but if you're only looking for that of a push, which I would guess you are, you can definitely get away with that. In terms of gold, so yeah, like I said, with gold, very sideways at the moment, but if it does break lower, I think there's some really nice shorting opportunities. NFTJ, what was your message again? Oh no, follow the trend. Gold continuation sells to 4,000 area from 40.50, 40.60 zone. So 4K is there. 40.50, 40.60 is around there. Move that out of the way. I mean, it's not bad. I'm not the biggest fan because we are coming back into this low here, which is where we did see some momentum, but we've had a nice consolidation, a pretty strong drop there, and then you're looking for the retest, full price to potentially go and take out that low there. It's not a bad outfit there. It's just choppy conditions, really. This trade would be really nice if it was like trending conditions back here. But since we've kind of stalled a little bit, yeah, it makes it a little bit difficult because, technically we're right back at lows. That possibility is a lot higher now. But I don't mind it because the idea of the trade is that, okay, we've been super bearish here, we're having a bit of a pause. Now it looks like momentum stepping back in, and I'm at least just looking for, a small opportunity back to the low. So I understand that. I'll just be quite careful as soon as we come back into this low, to be honest. Even if you see a pullback there and the market gets back here again, I'll start to be a bit careful at that low. If it breaks, yeah, the price very much going to hit 4K. I think 4K will be a bit of a draw on price at a massive psychological level. So I think there's a strong likelihood we get there anyway. It's just, we could very much do that before we get there as well. And we are coming back into areas of support, areas of demand, which we have to be careful of as well. So yeah, I don't mind the short. Just keep an eye on that low as like a management opportunity. And then yeah, if we do break for that low, then yeah, 4K does look pretty likely. But yeah, to be honest, what I'm looking for on gold now is pretty much the breakout of this range, then the opportunities that come after that. Especially if it's a strong breakout as well. I do think that could potentially set the direction for most of the week. We might kind of reverse towards the end, but it could give you a nice 2-3 days of solid momentum. We'll go through USD ZAR and Pound CAD next. Okay, so I'm 1 hour 50 waiting for buys. Nice. Yeah, I mean, it looks like a likely move to me, so I do not blame you on that one. No problem, Yusuf, happy to help. So in terms of USD ZAR, last time I checked, it was looking somewhat bearish. Okay, let me zoom out a little bit. Yeah, still is looking pretty bearish. I mean, price support turn resistance held really well. Multiple wicks there to the upside, holding really well as resistance. Looks to me that price is set to make another push back into these lows. It's been in a pretty consistent downtrend, so all we're looking to do is just predict a bit more downside in that trend. I do think there's a very high probability we go and take out this low here too. So not only is this trend still got meat to it, it's still got liquidity underneath that low, which I do think price likely to take. Especially if we zoom out and look at the weekly chart, you can see how price failed at the highs there. So this is still a very bullish market, but the fact that we failed at highs means that it probably will go and take out lows first before we try and maybe continue back up again. So that's why I do think it's a pretty high chance that that low does go, or at least we come back and test it properly. So yeah, a bit more downside I do think is the likely move. Now, how do you look to trade this? Well, entering in these areas is just a bit difficult. You're coming back into support, and then once you break through that, you got support right back there again. So I don't think it's a great place to be shorting. Ideally, you kind of want price to push back into resistance, even though we've respected this so many times. So coming back again is a bit of an exaggeration, but price has repeatedly respected that area until we break above it. I would always expect it to hold, especially in this situation. So yeah, to me, USDs nice short opportunity. I wouldn't really be looking to short it now. Maybe an intraday break of a low might get you to that low there, but you're not looking at like a huge risk reward opportunity here unless we get that deeper pullback. But in terms of direction, yeah, I do think there's another leg lower and at least a push to 17, and then potentially can discuss some buys straight away if we can see some strength come back into play. But a bit more downside still looks pretty likely to me. And pound CAD, this is an interesting one. It's a market which I'm keeping a very close eye because I'm looking to see which way my bias will unfold. Because on the higher time frames, we've taken out a really key high, and this could be cause for concern because typically, especially in ranging markets, after we do take our highs, we could very much easily see price go into pullback mode or even reversal mode. And since we're looking super corrective right now, it's not really an uptrend which I'm excited to keep looking to buy. Yes, we might still see another bullish leg, and I'll keep an eye out for that. But it's a super corrective market, and if it does reverse, I do think there will be quite a violent drop that precedes that. So I'm going to keep an eye for both sides. Not only, yes, we've got a bullish trend which we can still look to follow, but if we do go and break structure, I do think the reverse will look just as good or even better, especially because of where we're trading in the higher time frames. So the area which I'm going to keep an eye out for that is this low, because of course this is the low which gave us that high. So if I do see a solid break of this low, that would put me really bearish there for pound CAD, and I back away from that bullish bias. In terms of long-in opportunities for a buy, well, I would wait for some real momentum to enter the market. It looks to me that we're kind of in a little bit of a consolidation. So we're lacking that momentum, but it does look like we're forming a low, potentially forming a bit of a base, which is a good sign, especially for the buyers. So if you can see some strength above that high, yeah, there's a good chance we do continue and perhaps go back and retest the prior high and we see at least one more swing happen. So pound CAD, I would have the bullish bias for now because structure's still pointing up, we're still respecting lows. But I would wait for us to break to the upside to really confirm that momentum's here. That could be a buy signal. You could wait for a break and retest intraday there. And then you do have some room to trade it into, which is back to the high at 1.89. So overall, pretty bullish here for pound CAD. Pretty bullish here. Just waiting for the momentum to really step in. Euro CAD is in the same situation as well. If you take a look at Euro CAD, and then zoom out to the weekly chart, look where we're trading. We're just going to take out a major high. So this is always an awkward situation. Is this a legit breakout? Is it price just taking the high to reverse? I'm not too sure. In terms of the signs we're seeing of the characteristics of how price is moving, this looks really corrective, which would point more to the downside of things. But the funny thing with that is you could always see one or two more swings left before that move does happen. And those one or two more swings could be very profitable. So you don't want to just say, okay, let me just short, because number one, it might not push down. It might generally keep pushing. So you want to be able to take advantage of that. And number two, the timing side of things is very difficult as well. You might be right with the down move, but you might still see another 2, 3, 4 weeks of upside, which could still present some nice buys before we do reverse. So a good way to avoid making that mistake is just follow market structure. As long as we keep making these higher highs and higher lows, well, the buys still do make sense. And for now, we are still above this low, so the buys still do make sense. I said on the weekly analysis that perhaps maybe a nice double bottom could look good. Another run back to the low, strong rejection, banking on the lower holding, or maybe even price taking this high and continuing above that as well. That could be a strong sign. Either which way, we want to see price hold that low. So yeah, EuroCAD to me is still looking bullish. It's a bit of a sluggish trend, same with pound CAD. So I'll be waiting for really strong opportunities before jumping into that. It's not the cleanest trending market, but we are maintaining higher highs and higher lows. So direction is still up for this currency pair. But yeah, as I said at the start of the stream, my focus is a lot more on the yen pairs for now. So yeah, I'll try and stay away from markets which look too choppy. No problem, happy to help. No worries, Bashi. Raymond, what's up, my man? Hope you're doing good. Hope you're doing well. Hope everyone had a good weekend. I think in terms of my watch list, I'll quickly run through that actually. So yeah, mainly surrounding yen pairs. So I'm just going to look to see which is the best yen pair to jump into this week. Pound yen looks good. There's opportunity there because we're not back at high. So I like pound yen because of that. And this could be one of the better pairs, but we have to see what pound does this week. It hasn't been the greatest currency to be buying against the yen, but it's slowly picked up. So what I want to see for this one is some strength coming to the market, something like that. And then I can look for some pullbacks back to the high. I can drop to a lower time frame, maybe hourly, maybe 30, maybe even 15 if things look really good. And then yeah, bet on a push back to that high, and then I'll bet on a push back to 207.9 as well. So the reason why I like GJ is because out of the other yen pairs, there's a lot of opportunity in terms of price still need to take out some big highs. Euro yen and Swiss yen have already done that, so it's not as, I'm not expecting as big moves there. Of course, they're still bullish, and I'm still interested in them. Swiss yen's on the watch list as well, but I do want to see us kind of break to the upside before looking to bet on a continuation. A strong break like this would be a very confident sign that the buyers are still in control and that we can be seeing pullbacks here for a continuation. If I do see price break to the downside, that could be a sign to potentially pause a little bit. I mean, I'll keep an eye on this area, but it depends how we get there and how corrective price is. If it's an aggressive move, I'll be cautious. If it's slow corrective, yeah, I'll be happy to try and take that higher. Euro yen as well, I like the buys too, but again, similar situation to dollar yen, which is price right now is trading back into a high. So this is a very kind of interesting place. You know, is price sweeping the high to come down? Was price actually looking to break out and continue higher? Well, if I'm looking to buy, I either want price to pull back down because I like this zone here, or I'm waiting for price to break out and then looking for the pullback afterwards. Either which way, I don't want to be buying there. That's not the best place for a buy, especially after that 4-hour close as well. But yeah, Euro yen longs I'm going to lean into, see if I can get. I'm only just looking for one more trade in the yen pair as well. I've got the pound yen trade, but I have reduced risk there. So there's still a bit of risk on. It isn't complete. It's just underneath the lows there. So there's still a bit of risk at play, but it's heavily reduced since the risk I took getting into the position. So I don't mind trying to put that risk elsewhere in another market which is likely to continue higher, which for me Euro yen and Swiss yen look good on. And I was also debating dollar yen, but I think I'll just focus on those three out of the yen pairs. They look the best. And also because USD is just a little bit ambiguous right now, so I'll leave that alone. But if you are trading dollar yen, I would suggest a strong break of the high, and then some continuations look good. So yeah, out of the yen pairs, those three I'm going to be keeping a close eye on. I'm keeping a close eye on gold and silver as well. They've made my watch list too, mainly for bearish reasons, to be honest. But I like the range we're trading in, and if I can see a strong break to the downside, I will actually be looking to try and short the market. If the breakout's clean to the upside, I try and look for longs as well. But as I said earlier, I wouldn't be trying to trade back to highs. It would just be more so, okay, we've broken out. There might be a bit of a continuation, then I'm out. Or I might leave a small amount to run. But I'm actually a little bit more interested with the shorts, to be honest. So just want to see a strong break, and I'll bet on the continuation. Silver as well. I want to see a strong break, and I'll bet on the sells there too. And again, based on where silver's trading, if I expand to not even the weekly, the monthly market, this is a very, very suspicious area where price is trading right now. You can see last time we swept a major high. This was back in the 1980s. We swept the high in 2011. We came crashing back down. We've just gone and repeated the same situation. I'm not saying we're crashing back down, but hey, there is a possibility. So again, if I do see meaningful bearish pressure come into the market and lower lows and lower highs come in, this is a nice place for a short. It makes sense. A lot of people, a lot of buyers could be looking to take profit. And as a result, we might be seeing a bit of a correction. I'm not expecting silver to completely drop. I do think it just might be a bigger drop before the buyers step back in later. But again, if you're just looking for a trade for the day, for the week, that could be a nice opportunity to look into. So yen pairs I'm interested in, gold and silver. Keep an eye on which way they break out, but I do like both ways, but I'm leaning a bit more to the bearish side of things. Out of the crosses, so pound CAD, euro CAD, both keep an eye on the longs on those currency pairs in this situation. Nice demand zone. We're back in it. Hopefully, there could be some nice buys there. So euro CAD as well, looking really good. Again, I'll probably want either push back into the low or maybe taking out the high before I do look for entries. But same logic applies. As long as we stay above this low, I'm looking for a push back to that high. And in terms of some of the CHF pairs I do like Aussie CHF. For me, there's still a lot of opportunity here. Started off pretty bullish, so I won't be flying into shorts, but I'm still looking for a push all the way back down there eventually. You've got a really strong supply zone, which gave us that push. As long as price doesn't break supply, so it doesn't take up the high here, I am looking for us to eventually roll back over and get some shorts going and take out this low. It's been an extremely bearish market for quite some time. So yeah, I don't want to try to overcomplicate it. As long as structure maintains, yeah, just keep looking to short. So as we do pull back into the supply area, I'm kind of waiting for price to settle first. Maybe form some bullish structure, test the high, and maybe find a short later on. Very rarely is price just going to come in and just suddenly drop. If you look at how price is moving, it's a very flat, very stagnant. And when it does pull back, it kind of corrects for quite some time. Kind of use that same thinking with this next pullback as well. So not looking to be the first one in. Going to give this the time and space it needs to develop. Keep an eye on things as we do. And if it does look right, I'll be sure to try and find some entries. But still too early. Yes, we're trading there, but too early to look for entries. So Aussie switch I'll keep an eye on. And I'll keep an eye on CAD CHF as well, and pound CHF if it can break to the downside. I'm leaning quite a bit more heavily to the CHF side of things now, especially with pound CHF longer term. CAD CHF is kind of the here and now. It's been really, really bearish, especially if oil starts to weaken as well. This could actually be a really nice short to look into, because then you have a really weak currency with CAD, strong currency with Swiss, and you already have a pretty strong downtrend at play as well. Probability wise, still probably likely to go and take up that low. So in terms of an entry, what I'm looking for is price to sweep this high here, recover, and then I'll see if I can find an entry on that recovery. Because basically, we're looking at a break and retest of that low. So nothing complicated here. Already a super bearish market, consistent lower highs. I believe we're at all-time lows. We are at all-time lows. And just looking to see if we can get one more leg back into the low. But I would want to see price kind of take that high and then drop. And that's kind of where I'll try and place my entries. And yeah, we'll see how we go. Can have some intermediate targets along the way. This low and that low. But yeah, pretty bearish in my eyes. And who else? Pound CHF. This one not quite ready for the week. The only reason why this is on the watch list, just in case we have like a crazy breakout this week. So for example, we've got a really big support level here, and I do think it's going to break out, and I am looking for price to push here. Technically, you can say we already have broken out, which is why I'm interested in it. But I wouldn't say that's like a really confident breakout, which I'm dying to find some shorts. When I do scale to the lower time frames, yeah, the structure still looks super corrective. So I'm not prepared to be looking to shorts just yet. The trend's not looking quite healthy. So I kind of said, okay, it's definitely a pair I'm looking into. I wouldn't be surprised if we do break back above because of how corrective we are. We might have another pullback. But if for some reason pound CHF is super bearish this week and we drop again and really pick up some momentum, then this does become a market I'm interested in. This is the low I'm expecting price to get to eventually. And the plan is just pullbacks along the way, to be honest. So yeah, those are mainly the pairs I'm looking at. Quite a lot of emphasis on CHF because it's super strong right now. Emphasis on yen, super weak. Gold and silver, a lot of momentum has come into the markets recently. Could still see that continue. So trying to see what we can find with continuations. Pound CAD, Euro CAD, super consistent uptrends. In some cautious areas, if they do turn around, there could be some really nice short opportunities there. But equally, if we do maintain support, there could be some nice buys. So that's really my watch list. So quite a few actually this week, a lot more than last week. Last week I was a bit more cautious. I mean, I was still looking at roughly the same pairs, but now I'm a bit more confident with some, and I've added gold and silver as well. So yeah, I'll be happy if I can get some opportunities, and that's opportunities for the 4 hour and the hourly chart as well, and the intraday charts too. So it's not a situation where I have a separate watch list for different time frame because that would just be ridiculous. I trade over 30 markets, so if I looked through every single market for the 15, for the hourly, for the 4 hour, I'll be here till tomorrow, not trading, just looking and analyzing markets. So I filter from higher time frames down, and whatever makes the cut on the 4 hour chart, then it will be an opportunity which, if I can try and find an opportunity in between the lines, or maybe the pullback's a bit more shallow than I first anticipated, then I can use intraday to trade that. But yeah, those are the markets I'll be looking at this week. And yeah, unless we see something happen. I mean, we do have some USD news coming up later today. We got some durable goods for USD at 130. Not the biggest news event, but it can cause a bit of movement for USD. Later in the week, we do have okay, we've got Bank of Canada this week. That could be interesting. Definitely want to keep an eye on that one. That's at 2:45 on Wednesday. But in terms of USD, we got good trade balance. That's on Wednesday, same time. Actually, no, 1:30. Sorry. Oh, okay. I thought that was next week. We got Fed interest rate decision this week as well. I thought that was next week. Okay, it's a pretty big week actually. And it's come at an interesting time because I think the market is quite indecisive right now. And it could generally be that we need a bit of a Fed interest rate to come in to spice things up. Rates are expected to go up. So, yeah, I mean, it kind of does fit with the long idea on dollar as well. Maybe this is the catalyst to get the market to break out. I think just with technicals not looking great, I will let that news do its thing and then see what we're looking at the following morning, to be honest. And then potentially there I might be interested in USD again, or I might leave it to the week after. But yeah, that could be a big catalyst actually. And That actually could be a big catalyst. Yes, we do have news this week. We've got Canada, Bank of Canada interest rates on Wednesday, and we got Fed interest rate on Wednesday as well. What's the Canada rates expected to drop for CAD? 2.5 to 2.25, so keep an eye on that. Rates for USD expected to go up this week. We've got Bank of Japan interest rates as well. That's expected to stay the same. It's an interesting week, actually. What else? The Thursday, we've got a bunch of Euro, German news. Well, what affects the Euro, of course. Okay, got GDP for Euro 11 on Thursday. Jobless claims Thursday as well. GDP for USD Thursday 1:30. And then we've got the ECB interest rate decision for Euro. That's at 2:15 on Thursday. Rates expected to stay the same. And then Friday, is Friday the 1st? No, Friday's the 31st of October. I thought it was the 1st. I thought it could be NFP as well. That would be a crazy week. Then we've got CPI for Euro. Yeah, it's a pretty active week, I can't lie. It's a pretty active week. The only thing missing would be like an NFP or like a Bank of England interest rates. But yeah, it's a pretty active week. So I think, especially with the Fed on Wednesday, I think it's just a lot of caution. If you're going to trade USD, I'll just keep it intraday, be in and out. I wouldn't be looking to try and hold positions. If you are, I mean, you can, of course. There's no right or wrong necessarily. It's all just the best guess, to be honest. But if you are holding, I think maybe reducing risk going into that news could be a smart move, just because of the indecisiveness. I mean, you would expect to see USD be strong, but then again, rates, we could see price spike lower first, and then it could revert higher later on. So, and that push lower could be enough to take you out the position as well. So, just in terms of increased volatileness of the market and increased spread, it might be best to reduce risk a little bit. Then you can always add on back after if the market's in a good location, it hasn't gone too far from your entry. But yeah, those are the events I'll keep a close eye on. Today is just the good trade balance. I think in terms of my yen trade, I might look to reduce risk going into the yen interest rate. Fed, I'll just sit in the trade and not do anything, to be honest. I've already reduced risk, so worst case scenario is not really a bad case scenario. It would just be a small loss, about 0.25R. But the yen could be a bit chaotic, and I think the yen interest rate will be very pivotal, because I feel like that's going to be what's either going to get the yen pairs actually really going, or is it time for maybe a bit of a pause in that uptrend, a bit of a pullback. So I think that's where a lot of focus will be for the yen, and that's where a lot of my focus is this week. So might be a bit cautious. It might be best to wait till after that news has happened before entries. Yeah, and then we've got ECB as well on Thursday. So yeah, it's a pretty active week, I can't lie. Pretty active week. Definitely caution there. And especially if you're intraday trading, be careful of that. And because I'm starting to trade intraday as well, I'm going to have to pay a lot more attention to these news events now. Trading the 4-hour chart, of course, I kept an eye on things, but I didn't really spend too much time worrying about risk, because most of the time I was either probably max in like 2 or 3 trades, and very rarely was it I was in 3 trades at one time. Most is normally like 2 trades at once. Most of the times actually just one trade in one time. So worst that can happen is maybe I get slipped in that one trade, and because I'm using larger stops, and my lot size would be relatively lower compared to if I was trading like in the 5 minute or 15. even if I do get slipped, it's never really that bad. If I'm risking, let's say 1% of a trade, maybe I get slipped and I lose 1.2% or 1.3. Very rarely would it push 1.5, and almost never would it get to 2. So worst case scenario, use a little bit more than 1%, which is, you can still recover that pretty easily. So yeah, in terms of risk, never really worry too much on the 4-hour chart. I'll never trade directly into news either. Normally if I was long, it's a few hours before anyway. So yeah, 4-hour chart, didn't worry too much. Now I'm trading a bit more intraday. I have to keep a bit more of an eye and close trades prematurely, which is a bit annoying, to be honest, because you analyze the market, you expect the market to do something, and you have to close it because of an event. And sometimes the event will go in your favor too. So I think from now on, I'll just reduce risk, maybe widen stops a little bit rather than close the trade completely. Because again, with my experimentation and especially with my back testing, there's clear edge, but if I do close trades because of news, especially with the frequency of things, I could definitely affect that edge. To what degree? Difficult to say, but the edge could definitely be affected. So just reducing risk, which of course will affect the edge too, but at least you're still in the trade there. And if things go wrong, it's not as wrong as well. But yeah, I'll keep more of an eye now when I'm looking for intraday, and I am looking for intraday on some of the yen pairs and probably gold and silver as well. I think if I do get a short on gold, it'd be like an hourly chart. But to be honest, outside of that, there's not much going on. I mean, cryptocurrencies were pretty bullish. And again, we were speaking a lot about upside on the cryptocurrencies, especially Ethereum. BTC as well, because it looked like price kind of swept the low and then recovered. But if you didn't check out the weekly analysis, I mentioned that it looks like Ethereum is about to pick up some strength. We did pretty much see that pretty much as soon as I posted the video. And all I was looking at is just this huge level on the weekly chart. Resistance once, twice, a third time, break above, and then we're getting these continuous wicks to the downside. So that to me is a big sign that, okay, from a high time frame perspective, we could see some upside here, and I wouldn't be surprised if all of this downside move here, this corrective, wicks and mixture of candles, it's just another pullback of this leg for us to go take out highs again, and that's what I do think price will do. We've got that 5K mark, which we haven't actually quite hit yet. I do think price will go and take out that high and go and hit 5K. Big psychological level. I think a lot of people keep an eye on 5K for Ethereum. So yeah, I like what I'm seeing. Nice close on the week as well. A lot of wicks to the downside. It would be nice if this candle was a little bit bigger, just to really engulf that previous bearish candle. But the wicks tell a story enough, and it looks like we're also tapping in to a nice area of demand there. So now that we have seen some momentum here, as I mentioned last week as well, now you're looking for pullbacks and more upside. I think that's a smart buy there for Ethereum. BTC, similar situation. I wouldn't say the buy was as crisp as Ethereum, but the logic was, okay, we've got a low here. Looks like price spiked through, came back to retest it, redeem it, and perhaps we're going to see some upside there. I did say it would be nice if price can come back down for a retest, and then we continue. But it looks like we just had strength anyway, and now we're pushing up. But now price is not really at an interesting price now, because I'm looking at BTC as a range. So you got equal highs, equal lows. So the middle is where you're going to get the most noise. So because of that, that's where I want to stay away from. I want to focus my entries down here or up there or on breakouts. Now that we've seen some strength, great. If I was long here, could lock in some gains there and just leave the rest to run. If it comes down, so be it. We still walk away with a small win. If it gets back to highs, fantastic. We walk away for a pretty big win there. But yeah, now we're here, back to indecision. Not too sure on the next move. I mean, I would expect more upside. It's the nature of the market, but it's not a place which I'll be looking to buy. And XRP as well picked up some nice strength too. So altogether, it looks like cryptocurrencies are quite strong right now. Again, I wouldn't say like, okay, we're back to highs just yet, but I think especially if you're looking at intraday, longs do look really, really good there. So definitely keep an eye, and I like this level here for XRP. I think price will be really attracted to that area. So I'm going to keep a close eye on. And also, I do want to mention that I'm experimenting with some indicators in terms of monitoring how volatile, how expensive a market is, and also how extended the market is as well. I do have some indicators down here, ADX, CCI, that's the average G range. I'm just using that for stop losses. But yeah, I've been researching into these indicators, and so far they have been pretty interesting. Now, no indicator is going to be a game changer, but it can definitely provide you some insights. And again, trading is all about building a picture and stacking reasoning for why an opportunity could play out. And in terms of ADX, I like it because it looks into how expansive a market is. So, for example, if a market is really expansive, it means that we're seeing a lot of volatile price action, and especially if you're looking to follow momentum, follow a trend, it's a good indicator to use, because if it does say that, okay, the market is very expansive, very volatile, that's a good sign that momentum is likely to continue in a trend, and that you can have confidence in buying pullbacks that were likely to still keep seeing strength in your desired direction. And if this is a very low reading, it means there's not a lot of momentum in the market. That means if you're looking to buy pullbacks, the chance of price ripping back in your favor is quite low, and you can see a lot of noise, and the trade could move sideways, and you can spend a lot of time at your entry. So this reading high is a good sign of continuation. Low is a good sign of the market's quite flat, which is good for actually mean reversion opportunities, because if a market's whipsawing back and forth and this is having a low reading, it means you can buy the lows and sell the highs with that extra strength that, okay, we're not quite volatile now, not quite expensive enough to break out, so the odds are we're probably going to respect highs and lows. And then CCI, I've done videos on this in the past. I have used this actually many times, but because I've been leaning a bit more on the trend following side, I didn't really use the indicator much. But in terms of mean reversion, it's actually a very helpful indicator. It basically, to summarize, it basically shows you how extended price is relative to its mean. So this is a length of 20, so it will calculate the average price for the past 20 candles, and then it would see what price is at right now, and then it would say how extended price is from the mean, from that 20. Of course, you can change the number, but in that case, the 20 candle mean there. So the higher the reading, the more extended price is, the more likely it's about to snap back to its average. And typically, in terms of how you would rate this, I don't know if you guys can see it, the blue's a little bit faint. Let's use a lighter color there, and use a lighter red. Is that better? Yeah. That's just the ATR. So yeah, in terms of reading, so anything above 25 is a good expansive reading. If you have it set at 14, which again measures the past 14 candles, but anything above 25 is expansive. Of course, the higher the reading, the better, the more violent the market is. For example, if I take my cursor and put it around here, you can see the ADX says 40, so that's quite aggressive. But if I take it and put it here, you can see the ADX says 14, so very corrective conditions. And the beauty of this is a leading indicator as well. Well, not leading, but it tells you what's happening now. So it doesn't necessarily predict the future, but it tells you what the current environment is. So it's not leading, because leading will predict the future, or try to anyway. But it tells you what's happening currently at the moment. So I like it from that regard. And also the CCI, another not necessarily leading indicator, but it tells you what's happening for now. And again, in terms of reading this, you want anything to be above 100 or minus 100. And if it's above 100, it means it's quite far from the mean, which means you can look to short. Below negative 100, you can look to buy. So I'm going to be experimenting with these more. I've been back testing for the past month or so, and I quite like the confidence it does add. But there's always a difference between back testing and live data. So that's where the testing will come into play. And to be fair, it's not changing much. It's just an added confidence that I'm experimenting with, because I'm a big believer in terms of always looking to adapt, improve your trading as you continue. I think that'll be a big part in terms of sustaining success and improving success as markets change, as participants change, AI comes into play, AI improves. Markets will change as well. And a good way to kind of stay ahead of that curve is to experiment with things, change things, focus on things that are working well, get rid of things which are not working too well. Which is why, again, journaling for me is so important, because that's the only way you're going to know what is paying you, what's not paying you. Appreciate it, Bashi. Yeah, guys, drop a like if you are enjoying the stream, and of course, subscribe to the channel, and of course, any markets you are looking at, feel free to let me know. Has anyone used any form of like AI to like in any way to trade with, or to like analyze trades or analyze markets? Because that's something which I'll be trying to dive deep into as like an extra. Well, it's something I'm really quite interested in, but even on the side as well, and do a lot of research around that. Because the way it seems, looks like AI is only going to keep getting more impressive and more intelligent. And in the cycles of industry and business, there's always the next big thing which comes into play. Before AI, it was the internet. Pretty much all businesses were stores, physical stores. Then online shopping came into play, and that changed the game forever. And people who didn't get on the board and just had physical stores, some survived, of course, but a lot didn't. And I think AI is the next equal to that, to be honest, with the way everything's going. So I think trying to get ahead of the curve there. Not to say that AI has to do anything crazy, but starting to use it in your trading. Okay, nice, Sage Trader. Yeah, I do think AI can be helpful. It doesn't have to be anything crazy right now, especially with AI not necessarily being, especially in trading, great, but it does provide a lot of information, especially in terms of what the market could be doing, not necessarily in the future, but what's happening right now, and what to keep an eye on in terms of what could drive price, in terms of analyzing your trades. I've done a lot of analysis with giving AI my trading data, and then let AI give me some metrics or some findings which I can improve on, or what I should neglect, or what does my data tell me. And there's been some interesting insights, to be fair, which I probably would have overlooked or took a longer time to realize. So even in that regard, it can be extremely helpful. But I would recommend anyone who's not using AI, just dabble, dip a toe in. Don't have to be anything crazy. Just ask a basic question, start there, and check it out. All right, take care, Bashi. Have a good one, my man. Yes, be careful. FOMC this week. Yeah, we do have Fed interest rate on Wednesday. We've got a lot of We've got a lot of interest rate decisions. We've got yen. We've got USD. We've got Euro, and we've got CAD as well. So we've got four major currencies, major currency interest rate decisions. So very much keep an eye out. I have no idea, to be honest, Raymond. I look at that in terms of, okay, the market might be a bit volatile. It depends what policy she says. To be honest, I'm not really too clued up in her new regime and what policies she's going to introduce or take away. To be honest, I'm not really too clued up. All I know is that typically when a new prime minister comes into play, there's some added volatility. There's some more indecision. Maybe if the people are really backing the prime minister, that could cause the currency to go up. Remember times in the UK when our currency has fallen and risen when new prime ministers are elected, and yeah, that could happen with the yen. So I'm not too sure, to be honest. I'm not too sure. I'm just going to keep a close eye on. Yeah, exactly. Busy week. Just focus on managing risk, because at the end of the day, you can't predict what the market's going to do. You can have your best guesses, but the thing is, with news events, there's always that indecision in the moment. You know, you could look, okay, interest rates are going to go up. Most likely, the market's going to be bullish, and most of the time that is the case. But equally, in the moment, it could spike down against you. That could be enough to take you out of the position. So, you know, you might be right with the direction, but you got a loss to show for it. And that's really what, at the end of the day, matters. So, you know, risk first and then opportunity, especially if you're intraday. If you swing, you can get away with it. But yeah, it'll be interesting to see what happens with the yen. I'm still looking for yen weakness. I don't know, maybe she might turn the yen around. I've got my eyes peeled on the yen interest rates this week. At least between now and then, I'm actively looking to try and buy the yen crosses. Maybe after then, I cool off a little bit. But technicals still pointing up, and that's what I'm going to follow until proven otherwise, of course. What do I think about oil and CAD? Good question. Well, again, with oil, I'm still looking at downside. I'm looking at the higher time frames. I'm still getting a pretty strong bearish read in oil. The plan the past few weeks has been for us to take out this low. We came so close, didn't quite do it. Of course, since then we've had a really aggressive move to the upside. So for oil, my eyes are peeled on this level here. If we can respect this area, I think this could be a solid level where oil does come straight back down. If oil does break above this, especially with some force, then we could be looking at a bit of a V-shaped reversal here, and that could take us back into resistance up there. And then that would, of course, mean that oil is really strong. CAD is likely to follow as well because of you know how reliant CAD is with oil. So if oil does gain some strength, the CAD is likely to gain strength as well. And that could be a nice kind of meter to look at to gauge what you should do with CAD pairs, or if it's okay to follow through with an idea. Right now, I'm still leaning to this direction, but we'll see if we get that follow through, because we had a nice candle closure this morning, you know, kind of breaking out that consolidation. I just want to see some consistencies. You know, we've had one big drop. Can we get another? Doesn't have to be a big drop, but can price take out lows again? Well, okay, now we're starting to pick up some structure. Yeah, that could be the start of a pushback to lows. I don't want to see price now give me a strong candle back up again. That could mean a bit of a fake out, and of course could start some upside. But it looks like we're holding a lot of wicks to the upside. We're seeing some strength come into play. I am leaning to the bearish side of things, and if that does reject well, you know, looking for a push all the way back down there. So I'm leaning for CAD weakness, and I'm leaning for CAD weakness. So I'm leaning for oil weakness. So I'm also leaning for CAD weakness as well. Yes, we can take a look at CAD yen, no problem. Isn't that V-shape one? Oh, yes, but not a good one. Not a good one, to be honest, because I typically want my V's to get back to the origin of where it sold off from. So this is, yeah, you can say it's a V shape, but I would like my V to get back to here. Then I'll say that's a good formation of a V, because like if you, for example, you get a trend and then you get a really explosive move down and then you get explosive move back up, but only goes about halfway or 60% of the way, you could always see the price just continue to roll back over. If it gets back to where it came from, even breaks through as well, that's a really good sign. Then yeah, you can be pretty confident of a move higher. It was a very violent push, but at the end of the day, this level has a lot of meaning to it. So if you could see this momentum continue, push back to the high there, or just even break above this level, to be fair, then yeah, I would lean in the more bullish side of things. But this is a very critical level here at 61.8. So it could be leaning up to a V shape, but I would wait for us to be trading above that level before looking to a buy. Because even if it was like a really good V-shape pattern, I still wouldn't buy it because of the level we're trading into. I would still want price to be above that. Yes, we'll take a look at CAD yen. So CAD yen, again, I do have a remote bullish bias on it. It's just not overly fantastic. Again, if I zoom out, you can see we had a nice close last week, but altogether, a really corrective market here. Not really seeing much consistency there. And now we're coming back into resistance, supply. Is this an area which the market could form a lower high and roll back over, potentially? Is this a place where the market can break structure and push higher? Equally so. So I'm not really overly keen on what I'm seeing with CAD yen. I would be looking for buys if I had to. But it's just not, conditions are not overly favorable. If I drop to the daily chart, yes, there's somewhat of an uptrend, but again, really choppy conditions. We're about to approach resistance. If not, yeah, we already have approached resistance. So because of that, it's just not a great place for a buy. It's a similar situation to dollar yen. If this is set to continue and we are going to push through, let's actually go and take out this high with some force, and then that will give me some confidence to say, okay, yeah, this market is still very bullish and we're still set to continue. There may be like a small intraday play here. Retesting that consolidation. Dropped like a 15. And there might be a nice intraday play. Something like that. I didn't probably need to drop to the 15. Maybe even hourly might be clean. Because there is a pretty nice uptrend, intraday, intra-week. We have seen a nice move there, nice higher highs and pullback. So short-term buy, yes, but if you're looking for anything big, you do have a pretty big obstacle ahead of you there. So I would be careful with the longs on CAD yen. And of course, let's see what happens with oil as well, because if oil does reject that level and starts to come back down, well, you're looking at a weak CAD most likely. So then that will make it even trickier to buy CAD yen. I wouldn't be looking to sell it either. No problem, Raymond. Happy to help. Yeah, I agree. Very choppy. Yeah, I mean, that's why I'm focusing on Swiss, pound, and euro. I like keeping up to date with correlation. That's why I always group my markets in correlation, especially because I do trade quite a wide range of markets. But I do like to group them because then I can kind of organize what certain sections of the currency markets are doing. So I group the yen, I group the dollar, I group CAD, I group the crosses like pound, Aussie, New Zealand dollar, Euro, Aussie, pound, NZD, and I group the CHF currencies as well. So because of that, it allows me to see, okay, what's the consensus of the yen? What's the consensus of the dollar? What's the consensus of CAD? And that allows me to kind of say that, okay, if I am looking to buy pound yen, for example, well, what are the other yen pairs doing? Especially if you're looking for a swing trade. Intraday, you might not need to focus as much because it's a bit more intricate. You can be in and out, and you don't necessarily need synchronicity. If I'm looking to hold pound yen for like a couple of weeks, I've already held it for a week, then it would be nice to see Euro yen, Swiss yen, Aussie, dollar, CAD, New Zealand all pointing up as well. And also that might also allow you to choose a better currency pair to trade. For example, if you're looking to buy pound yen, it looks like all the yen pairs are pushing up. Well, maybe you find that for some reason CAD yen is giving you a better setup, and you might want to focus on that one. And equally, if I'm looking to buy pound yen, but all these other yen pairs are stagnant or pointing down, then that buying the yen, that buy on pound yen might be not the best trade. It might be a situation where pound is being strong for whatever reason, so it looks like pound yen is pushing up, but in actuality, the yen crosses are actually in a bearish situation, a bearish environment. So because of that pound yen trade might only last a short period of time before it does eventually copy what the other yen pairs are doing. So just purely based on that correlation, that can help you avoid some unnecessary losses, and also maximize your wins as well if you get a lot of correlation. But the thing is, correlation is not, again, something to add to the game. It's not something to completely bank on, because news will skew things. For example, like I said, maybe pound has some news, so pound yen's very, very bullish, and the others aren't. There's times where Euro Aussie is trending down and Aussie dollar is trending up, and that's purely because of the difference between Euro and pound. And a big explanation of that is if you look at Euro and Aussie, it's been a pretty steep uptrend. So the Euro is going to be a bit stronger than Aussie. So correlation is a good factor, but it's never something to rely completely upon, especially in the currency world. It's a good confluence, but that's all it is, confluence. Which euro pair you focused on? Euro yen. Yeah, it would be Euro yen. Euro CAD, sorry. I like Euro CAD as well. But if I had to choose one, it would be Euro yen. Just because Euro yen, I've got quite a clear uptrend at play. And I know if this pulls back or breaks structure and retest, I know that that's just a very simple buy opportunity, which I would like to take every day of the week. Euro CAD, it's a little bit more complicated. It's a nice trend, but it is tiring. So I still like the buys here, but Euro yen's a slightly higher quality opportunity. Might take a bit longer to play out though, and actually set up. But yeah, if I had to focus on a euro currency pair, it would be Euro yen. Samuel, okay, what's my take on Euro yen? Possible sell, forming double top. Yeah, I'm not looking to sell. I'm looking to buy. I mean, I understand it because, of course, we're approaching resistance, and of course, if price holds resistance, it can very much come back down. But again, I'm always about confidence. I'm always about following momentum rather than going against it. Of course, sometimes it makes sense to go against it, but it makes sense to go against momentum when either you've got a clear uptrend and momentum's gone to the downside, because then you expect to fade that momentum and the market to eventually push up. Or, of course, the market is sideways and you're seeing aggressive momentum into the high of the range. Well, if it rejects, you expect to come back down. I'll never try and fade momentum if we've got a clear bullish trend and I'm trying to short the high, even if it's a double top, because there's no merit in that. I don't really have any evidence to support price coming down other than the fact that we're at the high. And again, if you look at history, we normally break the high anyway. So yeah, I would not be looking to short Euro yen because of that resistance. Again, I understand it. Price at resistance, we can come back down, and we could still see some downside. I don't have a fortune cookie tells me what Euro yen's going to do, but it is an area which people can lock in some gains. We could see a bit of downside. I just wouldn't look to try and hold for a big move here. I'm interested to find out what your targets would be if you do short here, because if I had to short here for Euro yen, it would be a trade which I'm trying to get to like 1 hour profit and then I'm out the trade. Maybe a push like here, maybe if I was trying to extend it there, but it will be a situation if I'm looking for a bigger move, and if I do get to 1 hour profit, I'm probably locking myself break even, just give myself no no room for my price to go against me. Because if price does go against me, then it starts to reverse. Most likely, it's because price wants to actually continue the trend. They're probably going to take your stop. So inherently, there's nothing wrong selling the high. It's just probability is not in your favor, and I only want to take trades where probability is really in my favor. So yeah, there's nothing necessarily wrong with that, but be very, very cautious with management. I wouldn't try and look for a big move. If you are, trail stops aggressively, lock yourself in profit when you can. Because yeah, chances are if it does see some bullish momentum, it's not going to take much for us to go and hit the stop and take up the next high. So no, not really a setup I entertain. And actually, I'm looking to buy Euro Yen, funny enough. So a complete opposite. And that pretty much goes for all the other yen pairs as well. Not in the same degree though. For example, like if I go to CAD yen, like this is a better short. This is a better double top to take. If you're looking for a double top, CAD yen's a better trade. Why? Because the trend is less aggressive. There's less momentum. There's a much better chance that price does respect the high here and pushes down. Because of how aggressive the trend is, it's not really aggressive. There's a good chance we fail the highs. Last time we came into a high, we spiked it, then came back down pretty aggressively. There's a good chance we could do something similar. So I'd rather try and short CAD yen, or even like New Zealand yen. Yeah, if we get back to resistance here, quite a flat market, that's got a better chance of pushing down. In Euro yen's case, just shorten a really aggressive market. And we can also look at the ADX rating as well. If I drop my cursor at the high, you can see it says 24.92. It's not exactly the highest expansive reading. I would say anything above 25, I would say it's quite expansive. I mean, it's almost there, to be honest. But then, of course, if you go read CAD yen and see the reading there, CAD yen there, 13.5. So that's a very, very kind of not expansive market. If it gets the highs, it's most likely going to fail at highs and come back down, unless there's some crazy fundamental shift on the CAD or the yen. So yeah, CAD yen is a better short to me. On like New Zealand yen, for example, take a look at that. We'll start reading 16.5, much better reading there. So yeah, I wouldn't look to short Euro yen. How is the indices performing? I know they gapped on the open. Okay, they're looking a little bit bearish. Could come back to fill the gap maybe, and then continue. I did talk about a retest of this area this week, but I'm not too sure if we'll get the retest now, especially with these gaps. It's going to take a pretty big move for us to even get there to start with. Let's look at the S&P. Yeah, tricky. I'm not too sure if we'll get that. So, I mean, looking really bullish. Potentially could even look to buy on a gap fill. So once the market does fill the gap, we could see a continuation there. Yeah, but I still like this opportunity. Really nice breakout, retest, you got the high lows. Even with the gap, I still like it. It's just that, okay, we might be very bullish, and we might choose the gap to continue rather than this area. So you might be standing waiting on the sidelines there, but we'll see. Still a very bullish market regardless, so looking to buy the pullbacks and find the continuations there. Let me see what the consensus is for USD this week, because of course with the Fed interest rates this week, I feel like a lot of people are going to be leaning into the bullish side of things, but because we've had a bit of a rally, I feel like people might be shorting now, and because they're shorting, it's going to make things a bit interesting. But let's see the case. Yeah, actually, let's do it on Euro USD. Actually, yeah, let's do Euro USD. It's more liquid, more information. So yeah, Euro USD. So I'll expect people to be kind of buying the lows right now, especially intraday. But of course, people have been very, very short for the past maybe week or two. But now we are pushing a little bit on Euro. With this higher low coming to play, I can see maybe that attracting some buyers. But of course, if USD is going to be strong this week, you're going to see this happen. Okay, yeah. Increasing bullish bias. Okay. ECB. But the thing is, even if the euro is hawkish, you know, USD normally has the final say. Yeah, I mean, it could cancel out, to be honest. It could cancel out. But even, yeah, the Fed interest rates before ECB's on Thursday. So you're going to have the move from the Fed first, then the ECB. Retail position, crowded short positions building up, okay. Cautiously positive with the focus on ECB Fed policy, okay. Okay, I suppose let's focus a lot on the euro side of things. Yeah, I mean, I wouldn't look to follow it. To be honest, I'm not really looking to trade. I'm just interested to see what people are doing with the dollar. Because that could be useful information after the news has happened. But in all honesty, I'm not really looking to trade euro dollar this week. The only way I'll be interested to trade this one is if price out of nowhere has a drop that will take out this low. That's the only way I'll be convinced to trade it, because then I'll be happy with shorts. Because now I know this bullish market has formed a high, and I'll be looking to buy the pullbacks, sell the pullbacks on the way down. Right now, still it's too indecisive. It's an uptrend, but a very sluggish one. And if I'm gonna follow an uptrend, it's because it's still healthy. Yeah, we'll look at the DXY. Yeah, DXY still looks ugly as anything. And again, a lot of trading is not necessarily about trying to predict the market and be, you know, the best analyzer of the market. A lot of trading is just not doing the dumb stuff and not taking the bad trades, to be honest. Because especially if you got a bit of experience in the market, like a year, especially focusing on like on a consistent style. Because with a year in the market, just focusing on one style of trading, you can get pretty knowledgeable and pretty efficient at that style. You don't need to be trading for 5-10 years to reach a good level. You know, even a year of just dedicated effort at one style, you can become very knowledgeable of it, especially if you journal a lot, reflect, back test, you know, really kind of dive into it. You can definitely find a lot of information there. So you don't need to be spending a lot of time in the market to get to a good level. Of course, the more experience the better, but just understanding of a strategy, you know, a year can give you a lot of information. So once you do get good at that, a lot of the time you take a good trade, then you take 5 poor trades or 5 lower quality trades. They might not be poor, but they might be of lower quality, and that's what's going to skew your trading. And a lot of trading is just not taking those lower quality trades, because a lot of people can find the good ones. A lot of people are trying to always find the best opportunity and always trying to find really good trades every single day, when that's not the case. A lot of the time, you could probably find one good trade a week, probably. I'm not saying you should only take one trade a week, but if you probably did, you probably would do better for it if you just focused on the best trades and took them. You only be taking 4 trades a month, so you won't be very active, but I think your P&L will definitely help for that. I see that in my trading, and I bet that's for a lot of people as well. Again, I'm not saying you should only take 4 trades, but you know, take those good ones and then try and find other good ones. And if it's not quite working, get rid of that. A lot of trading just getting rid of the noise and focusing on what's doing well. And right now, USD for me is a bit of noise, so I can imagine a lot of people getting whipsawed back and forth here. Annie, what's up? Hope you're well. Potential target for oil. Current leg downside. Okay, so the retest resistant. Okay, I'm doing good. Annie, hope you're doing well as well. Thank you for asking. But yeah, good question. I mean, we have come back into a huge level for oil. And quite frankly, if this is a successful retest, I expect the oil to be trading back down here, 55.16 eventually. And of course, depends what your time horizon is, what time frame you're trading on, and what you're looking from the trade as well, and how big your stop loss is. Because if your stop loss is just like a few pips above the high, it's going to be a bit more difficult to look for the bigger move. If you've got a bigger stop loss, well, even if price does spike above slightly or it has some extra volatility, you can stomach that. So it does depend on a lot of things. But just for like a generic swing trade on like a 4-hour chart, I would say if we can get halfway down this bullish leg, you're looking good in terms of managing the trade, reducing risk. And I would say this is like a good target to have. That's a meaningful swing. You're probably looking at maybe 3-4R back to that low. Again, I'm not too sure about your entry and your stop loss, but you're probably looking at least 2-3R there at the very least, probably more than that. So that's a good target to have. But halfway, especially where that gap is, we've got a little bit of indecision to our left there too. I think that's a good place to manage the trade, reduce risk, or start to trail stops. But when I'm looking for a swing trade, I'm always looking to target the next high or the next low. So because this is the previous low which gave us the pullback, well, by default that would be my estimation for the trade. But equally, because this is a really aggressive leg, it's a pretty big pullback, I think that midpoint where that gap is a good way to book some profits and manage that trade. Because maybe if price is generally looking for a reversal, we might do something like that. At least still walk away with something or avoiding a loss. Bashi, I'm picky and trade one way. Yeah, I mean, again, being picky is a good thing in trading. I think there's always a balance between trade frequency and quality, because at the same time, because you could have one trader who takes 3 trades a month or 2 trades a month. So in a year he would take 24 trades, and you can have a trader who would take 240 trades in a month, and they can both walk away with the same P&L. The trader B takes 10 times more trades than trader A. They walk away with the same P&L, but the efficiency and the potential drawdown you would have had with trader A would be a lot better, because of course they're taking 10 times less trades to make the same profit. So they're trading a way better system, or the way they trade it is a lot better. So they're a lot more efficient than trader B. But of course, at the end of the day, we're all here for money. At the end of the day, trader A is still getting paid the same as trader B. But in the long run, trader B is more exposed, because you're taking 10 times more trades, which means your account is exposed to 10 times more risk. If you're only taking 2 trades a month, the other one's taking 20, I'm not going to say it's likely to happen, but you could potentially take 20 losers in a row. That could happen. The worst case scenario, trader A only takes 2 losses in a month. Risk is very managed in that situation. The second trade, again, you can still very much manage with 20 trades. You could be risking 0.5 risk per trade, so max loss would be 10%. Still very managed, but you're just having a lot more exposure. So trader A is a bit more efficient. But there is a cutoff mark as well, because there will be times where, again, you have that super low frequency, so you're going for high quality trades, but sometimes the market might not be aligned with you, so you could still experience a loss streak. You still could experience some losing periods, and because you're not trading very often, you could still be in like a stagnant stage or in a slight drawdown for quite some time as well. That could happen too. But overall, the efficiency should be better. So you be the more efficient trader. comment that. Yeah, that should be your tagline, Bashi. Get that on a shirt or something. Yeah, less is more. Less is more. Especially in a game where every trade you take is more risk. You know, every trade you take is more risk. So if the trade's not worthwhile, you're just putting yourself at detriment there. You're putting yourself on the back foot. So you want to start off really cautious, then get more aggressive if your P&L is pointing that direction. You know, for example, if you have a trading account and you're down 10%, actually let's up it. Let's say you start a trading account and you're down 30%. You know, clearly something's not going well in your favor at this moment in time. Maybe things will change. Maybe it's just a bit of a bad period in the markets. But clearly it's not going in your favor. So as a result, you're going to have to be less aggressive. Yeah, let's say if you start a trading account and you're up 30%. Well, maybe if you want to really take advantage of that, you can increase risk because it is going well in your favor. I'm not saying double your risk, but you can increase it by 0.2, 0.3, 0.4. Are we back? Okay, we're back. Apologies, guys. The data's still good. It just has like a little glitch. Yeah, exactly. But again, that's not wrong. Cause that's not a bad thing that you draw down for 2 months. Because again, we're always looking at the long-term picture. But yeah, the person who's a slightly more active trader probably won't have bigger drawdown periods in terms of duration, but they might have a bigger drawdown in terms of the size. Because of course their losing streaks will be bigger, they'll take more losses, but because of their activity, they'll recover the losses a bit quicker. So there's a lot of pros and cons, and a lot of it depends on your goal. Because let's say if you're managing someone else's money, you wanna minimize drawdown as much as possible, timing drawdown as much as possible. You're not there just to completely maximize profits. If it's your own money, well, yeah, you're there to maximize profits as much as possible. Of course, manage drawdown too, but you're probably happy to take a bit more drawdown or be in drawdown for a bit longer if it means more profits at the end of the month, end of the year. So it depends on goals as well, and also just your risk appetite. And that's why I like trading, because it's so unique. You know, whatever situation you're in, you probably have your own tweaks and own adjustments, which another person might not agree with, another person might be all for it. Exactly, that's your nature as well, the two bash is like you're leaning into that, which is a good thing. Thank you, Bashi. Yeah, welcome back. It does cut out right at the end of the stream as well. I couldn't just wait another 5 more minutes. True. That's very true. I think, yeah, I mean, especially when you're trading lower frequency, because I think the key metric is frequency of trades, because monthly is probably misleading to you, Bashi, because of the amount of trades that you take. I would take a look at pound USD, by the way, of the trades you take, because you don't take enough trades for the monthly to actually be worthwhile to reanalyze and dig deep in. For example, the trader that does take 50 trades in the month or 20 trades in the month does have some merit to look into what went well this month, what didn't go well, and actually learn from that, because you have enough trades to actually go through. If you're not trading that often, then you're going to need to wait a lot longer to actually have a good sample size to actually analyze. And same for like, you know, really aggressive scalpers, so they could take 10 trades in a day. So in that situation, they'll probably look at their results every day and go deep into it. Whereas for you, it wouldn't make any sense to review the day, especially if you haven't taken this position. Yeah, 8.7, that's great going. Just 3 trades, yeah. Yeah, and the thing is, you don't need to take every trade as well to get good percentage. That's the good thing. You can still afford to miss trades and still achieve. That's when you got a really good system as well, when you don't have to be so on the ball. Because if you have to take every trade to hit your targets, then you're under the pressure automatically. Because if you miss a trade, that affects your P&L. If you can afford to miss a few trades here and there, and it's not really affecting your P&L, you're good. What's up, Francis? Hope you're doing good. Yeah, 46 trades a day is bonkers to me. I mean, I'm sure we've all been there. We've taken aggressive. I've done that in the past. Maybe not 46, but I've definitely taken like 10, 12 maybe. Okay, pound USD, I'm on pound USD. So pound USD, I'm not in love with the price action. In fact, USD pairs I'm kind of staying away from as much as possible this week. Probably just going to keep an eye on the Fed interest rate really to kind of make things a bit clearer, but direction is sideways. So if I'm going to trade this, I'm looking to buy the extremes or sell the extremes. I want to be at the lows or highs. Right now, I'm neither at that location. I want to be down here or up there. Here's in the middle. But doesn't mean there's no opportunity, because it does look like to me that price has come back to demand and potentially get ready for a bit of a shift there. So maybe you can be looking for some pullbacks after that breakout has happened. It looks like we're leaning that way. It's just the overall areas which we're trading, I don't think is particularly great. So because of that, I'm staying away from pound. My focus is there and there. And to be honest, I'll probably even leave it alone. But if I had to trade it, those would be the levels I'm looking at. But yeah, pound looks like we are forming a high low, especially if we can get that breaker structure. And I would say pullbacks intraday make the most sense. Euro Aussie, Euro CHF. Okay, we can take a look too. No problem. Annie, happy to help. Would you comfortable to buy that? No. You think it could test recent lows again before moving up? Not that I think it could test recent lows, but I would rather it do that before buying, because it would be a better situation. Because again, your goal as a trader is not to necessarily catch the move, it's to catch a good trade. And what are the components of a good trade, especially when things are really choppy. You always want to be at the lowest price possible, at the highest price possible. And if I'm in the middle, I wouldn't say this is necessarily in the middle. I would say middle's a little bit higher up. You're more bullish territory here, so it's not complete noise. It does look like price is forming a bottom here, but again, when things are choppy, I want to be on the outskirts. That's where I want to position myself. So it's not that I think that price is going to make that move. It's just if I was to buy here and take a loss, I'll be like, okay, I should have waited for price to be there. I'd rather take the loss here because I know I'm at the extremes. So it does look like price getting ready for a bounce, but it's just not in the area which I want to be trading in. Yeah, in terms of Euro Aussie, still extremely flat as well. Another pair which is kind of ranging, which another pair I want to be at the highs or at the lows for. But zoom out the daily chart, extremely flat, not really going anywhere. So again, I'm not really interested in trading this where we're trading right now. Sure, if we push to the low here, things do get interesting, buying that back up, and likewise with the sell. But here I don't see much. Maybe again intraday opportunities on the way down there. But yeah, things can get awkward here. Things can get awkward. It's not always going to be a clean drop or a clean rise. So yeah, that's really where the focus is for Euro Aussie, and it has been for the past kind of week or two now. I can understand the logic of shorting back to the low. It's just I think we'll lack momentum and some real strength there. And Euro CHF as well. Euro CHF, I still do fancy a bit more downside because I'm expecting New all-time lows. So the way I see it, I think price is probably having a bit of a pullback before continuing lower. Still a really bearish market, and it broke through some key support past couple of weeks. So yeah, I think this is like our last. It's a very choppy market, but this is our last kind of consolidation before the drop. I'd bet on a continuation like that for Euro Swiss, and then I'm expecting this low to go, and then maybe after that is when we change direction and recover. So yeah, that's kind of where I'm at for those currency pairs. Yeah, exactly. Yeah. Clocks changed in the UK, which was a bit awkward, but I tried to keep my streams in line with the UK time. So yeah, always keep that in mind. And when the clocks change again, I'll change with it too. Would you say this year's been difficult for new traders? No. It depends. It depends what you focus on. Because there has been opportunities. I mean, if you let's say if you focus on USD majors, which I suppose a lot of new traders will focus on, the start of the year for the start of the year for 2025 was up here, and we might not end here, but let's say by late October, early November we're here. That's a clean drop. It's a pretty clean drop. So I think you've had opportunity in terms of trend. Sure, now is going to get ugly, and probably a lot of the profits made here are just going to be given back here, because again, that's where the naivety of the new traders come into play. Because what worked here is not going to work here, or at least you have to be extremely more picky in this situation and manage trades differently. So I think there has been opportunity, and if you focus on yen's been choppy. It's starting to trend a bit more towards the end of the year. Yen's been quite choppy though. Other crosses have been quite choppy, although there has been some relatively decent trends on CAD pairs, especially Euro CAD and Pound CAD, Aussie CAD, New Zealand CAD, not much. But yeah, if you focus on USD majors, you had some opportunity, especially gold too. If you traded gold, but let's say new traders didn't trade gold and just focus on these markets. I think it's been okay. Of course, not like 2022. 2022 was magical. And then 2023, 2024, horrendous price action. 2025, not bad. Maybe a shaky end to the year, but we'll see. So I think it's just been as hard as any year, but as fruitful any year if you played the cards right. I'm currently in GJ. That's the only position I'm in. This was from last week Monday. Still very stagnant. I have trailed stops underneath the low there. Still a little bit of risk on the table, but I'm still pretty bullish on the yen pair, so I'm still trying to actively buy them. But yeah, lacking some real emphasis, and I think maybe we might see this just go sideways for the rest of the week because of the yen interest rates on Thursday? Thursday, on Thursday. So I might even take some risk off, to be honest. I might keep stops here, just give me a bit of room, but I might lock in some gains because I haven't closed any profits, so I might lock in some gains just before that news. But we'll see. I'll let you guys know if I do anything. High time frames would be good. Again, maybe like intraday 15. I haven't been so clued up. I've only been focused on 15 since the past month, actually. Or month and a half. But we've seen some nice trends on the high time frames. Yeah, I could go break even. It's just a bit of an awkward situation though, because I like having protection. So if I do go break even, I'm basically saying that if price respects structure, I could get taken out of the position. Of course, in terms of risk, it makes sense. But in terms of just managing the trade, it makes a bit more sense to have them there. I could have it there and be super aggressive, but that to me is prone to getting wicked out. At least here, I've got a bit of room. I mean, my original stop was down here, so I've reduced it by like a good 70%. So risk has dropped dramatically. Not completely, but it's reduced a lot. So I like where it is. Still a bit of risk, but I don't mind losing a little bit there if it gives me more of an opportunity to capture the bigger trade. But like I said, I'll probably take some positions off going to the news. But anyway, guys, we have come up to the end of the stream. I do appreciate each and every one of you tuning in and interacting with me and dropping likes and subscribing to the channel. If you haven't done so, please be sure to go and do so. It does really help out with the channel, and I am very appreciative of everyone who does that. I will be live again tomorrow as always. Remember, it's the UK times have gone backwards an hour, so it does look like I'm streaming a little bit later than usual, but it's still in line with the UK time, so keep that in mind. But yeah, guys, really appreciate you tuning in. If you do want to see like trade signals and members only videos, check out the channel members below. There's added perks there, trade signals, members only videos as well, some more deep dive into technical content and psychological videos there as well. So if you want to check that out, feel free to do so. But yeah, guys, I will be live again tomorrow. I'll give you an update on the position. Any new trades I get in, I'll let you guys know. But yeah, guys, thank you so much for tuning in. Have a great day, and I'll catch you all in the next stream.
Six AI agents, each built with a unique edge. Miko, AI, Team Leader. Ori AI, Fundamental Analyst. Exi, AI, Technical Analyst. Mesa, AI, Risk Management Specialist. Fenwa, AI Market Sentiment Analyst. And Naledi AI, the cryptocurrency expert. Together, they're engineered to protect, guide, and transform your trading. The future of trading is here. Experience Zentrix AI.